Hello and welcome to the E4X Video EFX series. Today's guest is Paul Hodgson of Sungard Capital Markets, who will be discussing the challenges of deploying cross-asset trading platforms. So Paul, people have talked about cross-asset class trading systems for some years, but there are still very few on the market. Why is that?
Well, there are a number of reasons, and most of those have come out of the fact that cross-asset class solutions are built for trading a number of different asset classes, and the problems in trading those are different. People try to bring together the application from different asset classes in a way that provides a solution to support all of the trading activity. And some of that may have assumptions which are appropriate in certain circumstances and not in others. Resolving those between the different asset classes will produce solutions that may work for some asset classes but not others. A lot of solutions now are addressing that and can provide cross-asset class solutions.
Great. Is risk management and the cost of IT deployment the key factors driving demand for cross-asset class trading systems? And if so, why?
Well, yes, these are two major factors. The risk management aspect is very important because we need to be able to bring together all of the different asset classes and provide risk management across those. And there may be forms of risk that get generated by trading in one asset class that are actually managed in another. The cost of systems is very important as well. Obviously, if you have two different silo solutions, then these will require support and operations for each of the system. Whereas if you can bring them together within one platform, you can rationalize a lot of that approach. So yes, both of those factors are very important.
And what architecture and key functional characteristics should a true cross-asset platform have?
Well, a number. The key one is obviously for capture of all of the individual transactions within a common database. In terms of being able to support all of these asset classes, there are aspects that are different for the different asset classes, and so a very big factor will be the extensibility of the system. In terms of capturing individual asset class deals, you are limited in the breadth of needs of those systems. But when you start to look at cross-asset class, there's not only the aspect of capturing a number of different asset classes, you're also talking about individual deals that may be structured from the different asset classes. And the parameters for these can be very different. And we, as vendors, we cannot know every single parameter that may be the basis of a future cross-asset class deal. So extensibility is a key feature.
Are there any specific trading system requirements that have proved difficult for developers of cross-asset class solutions to achieve? And if so, why is that?
Well, the main one is the bringing together of the different assumptions that are relevant in the individual asset classes. With different asset classes, you have different actual needs. Some may be high volume in terms of the number of transactions, but very simple in terms of the processing. That's common in things like FX and equity. But then, of course, when you get to derivatives and particularly structured derivatives, there's much more complexity in the processing, in the calculations, but the volume is not there. So a system that can provide both the needs in terms of processing large amounts of data, but in a simple manner, tend to be fairly at odds with the mechanisms of complicated calculations on lower numbers of deals.
Is providing real-time STP across the entire transaction chain without any breaks really achievable?
It should be. There are many reasons why systems may not provide that, but within a common environment, you have a lot greater capability of doing that. The full SDP requires obviously the integration not only from the point of input, but also right the way through to the settlement and clearing systems. And if that is all within one environment, then you have a much greater chance of actually bringing those all together.
Do you think some providers have tried to make their systems too extensible? And if so, what are the dangers in that?
Well, as I mentioned earlier, extensibility is a key feature in terms of cross-asset class systems. You cannot know where the market is going to develop new financial products, and you cannot know what those specific parameters will be around those new asset classes, those new structures. So bringing those together in a system requires extensibility. There are a number of issues in doing that, and a lot of systems do trip up on those issues. But the key is a strong architecture, a very good design for the extensibility of the system, not only in terms of the data, but also in terms of calculations. And those are the real fundamentals of building an extensible system.
Latency is also an important consideration for many high-frequency FX trading firms. What is Sungard doing to make sure its cross-asset class platforms can overcome processing latencies?
Well, performance in any system is key, and at Sungard we always look at performance to ensure that the system can deliver on the needs. That's not only in terms of latency, which is more related to the actual responsiveness to external events, but it's also in terms of throughput, so the STP aspect. And from the sense of the latency, we tend to build functionality in at the closest point to the event. So if there are events coming from, for instance, ECNs or web portals that provide transactions into the system, then we build the responsiveness in the system as close as possible to the source of the event as we can.
Sungard Front Arena, also for FX, is a component module within the Front Arena application suite. How systems like yours reduce operational stresses and meet the future transaction processing needs of the FX market?
Well, again, by providing a solution within a cross-asset class solution like Front Arena, we provide for not only the efficiencies in the operational side of the system, but also in terms of a lot of the risk management side. As I mentioned earlier, you need to be able to have all of these asset classes within one solution to be able to risk manage not only the fundamental risk of the trades that you've traded, but also any incidental risk that may come in. And so by providing all of this within one solution, you have more efficient use of the trading operation from the risk management point of view, but also in terms of bringing this into a common database and bringing it into a common settlements processing system. You can provide much more efficiency there. One other aspect, of course, is bringing everything onto a common platform. From an IT operations perspective, you have efficiency in terms of the operations there.
Great. And last question for you. Have we largely overcome many of the challenges in developing true cross-asset class trading platforms, and will we see these systems being rolled out anytime soon?
Well, Sungard and Front Arena are delivering these solutions as we speak. We have implemented a lot of the capabilities within the system to support these asset classes, and we have customers who are getting value from our system in a cross-asset class world right now.
Thank you very much.